Prospectus Review number 4, American Funds, Bond Fund of America, Part 2. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, our website, and the sources for this discussion are the Morningstar link that I did on the last video, and now I'm going to the opening portion of what American Funds has on their website for Bond Fund of America. Investors should carefully consider investment objectives, risk, charges, and expenses. This and other information is contained in the fund prospectus, which can be obtained from a financial professional and should be read carefully before investing. Past performance is not indicative of future performance, and this presentation is for educational purposes only. And you'll see that I have the beginning of some definitions down here that I'll cover. So what I've gone to now, as you can see from the address at the top of the page, is American Fund's website page for Bond Fund of America, and this is their introductory page, which I think does a great job. Excuse me. Talks about the net asset value of the fund, which I'll define again in a minute. A ticker symbol, Quotron symbol for where you could find the fund if you type it into any sort of bond or stock search program. QSIP number, which I haven't mentioned, is a unique identifying number for every mutual fund, just like there is one for every stock and bond. So let's go down to the fund objective. It says the fund objective is to provide a high level of current income and is consistent with preservation of capital. What I mean by that term, preservation of capital, is to maintain the value of the original funds that you invest in. Maintain the original value of the dollars you invested, because many people that buy these bond funds are retirees or people who want to live on the income, and so it's important that they maintain the capital, the original investment, so they can get that back and invest it again. So that's fund objective. Distinguishing characteristics. Broadly defined fixed income fund, which is another term for bonds, with the flexibility to respond to various bond market conditions. This fund does have turnover. It does buy and sell securities. It doesn't purely hold them. Types of investments. Primarily invests in corporate debt securities, those bonds issued by corporations. U.S. and other government securities, which include government agencies. We've got lots of different agencies out there. Freddie Mae and Fannie Mae and Freddie Mac specifically are related to the next point, which is mortgage-related securities. So let me define a couple of things that come up in this section. This is an example of a bond. This is from my Intermediate Accounting 13 video, where a corporation issues a $1,000 bond. It's a 7% bond due in 10 years. In this example, and the owner's name is printed on the certificate. So the objective of a bond is you invest $1,000, you earn 7% of that $1,000 or $70 a year in interest. So you can go to, if you like, I go back to my website. You can scroll down to my website if you want more of a definition and go to the Intermediate Accounting videos. And if you scroll down a little bit, there's all kinds of videos on bond accounting, and so I'll leave it at that if you want a better definition of what a bond is. But for this discussion, I do want to define again a mortgage-backed security. This is where we pull together groups of mortgage loans, home loans, other loans, backed by property, and we buy them, and that's a typo, with the proceeds from the sale of the security. So if we raise $100, we go out and buy $100 worth of mortgages. These mortgages repay principal as the mortgages are paid off, just like you pay on your home loan. Some of your payment goes toward principal or the original investment, so that comes back to the mortgage-backed security, which then goes back as principal to the investor, as well as interest on the mortgage, just like you pay interest on your home loan. So that is what's meant by a mortgage-backed security, which is what they mention on the American Funds types of investments, a mortgage-backed security. They do have the flexibility to buy some non-U.S. debt up to 25% of the assets, entities outside the U.S. And they talk about maturity, or how long is it till the bond matures and pays back their original principal. Typically, the fund will be invested in intermediate to long-term securities. So let's take a minute and define what we mean by those lengths of time. Typically, short-term bond funds or short-term bonds, think about 5 to 7 years, intermediate 15 years, long-term 25 to 30 years. Normally the longest a bond is issued, whether it's a treasury bond, a municipal bond, a corporate bond, is 30 years is usually the max. There are exceptions. So this is in the middle. This is a 15-year bond fund. Typically, that's the length of time of the bonds that they're investing in on average. Intermediate to long term. Now, like all funds, there are restrictions. It says the fund generally invests at least 80% of its assets in bonds of various types of money market instruments. Then they talk about rating. At least 60% of the assets will be invested in securities rated A3, A-, or better at the time of purchase. Now let's talk about bond ratings for a minute. If you go over here to bond ratings, a bond rating generally is a judgment on the ability to repay the principal and interest on the debt. There's two ratings companies. There's S&P and Moody's. Their ratings look the same or close to being the same because they use letter ratings. And the ratings can go up from a high point of AAA. There are only 10 to 12 corporations in the world now that have a AAA rating, to a very low rating C, which would be just about in bankruptcy. And again, bond ratings refer to the ability to repay principal and interest on the debt. So if you go back to the prospectus summary, A is toward the bottom end of that top level. There's AAA, AA, and A, and then they have minuses on them too. So A minus would be below AAA, below AA, below A, it would be A minus, to give you some idea of where those ratings fall. Finally, it says under portfolio restrictions that it's the fund's current practice not to invest more than 10% of the assets rated B, BB plus or below, because once you get down into the Bs, the risk as the letters go down gets higher. So this is a comment about the creditworthiness of what they're investing in and the ability of the bonds to repay principal and interest on the debt. Capital gains, let's talk about that for a minute. This fund would have capital gains when they buy a bond and then sell it for a gain or loss. So there is a capital gains impact, and they say they pay the capital gains in December. It's good to know that so that that's not a surprise when you do your taxes at the end of the year and you're gathering information in the spring. You don't want a surprise that you notice a capital gain was paid in December, because it happens just about every year with a fund like this. Finishing up, I'm going to scroll down to the bottom here. They talk about average annual returns at NAV and with a sales charge. Here's the return over the lifetime. 1, 5, 10 years in lifetime is typically how these returns are laid out. So you can look at the lifetime return right there. I want to make a distinction between expense ratio and sales charges. So I'm going to jump back to the Excel. Again, net asset value is generally the total value of the fund's investments divided by the number of shares held by shareholders. With a mutual fund, you own shares. The expense ratio normally goes to two things: to pay a money manager, normally listed as an advisor, and also the distribution costs of the fund, which is paying the people who sell the fund, create the website, all the marketing materials, some fees to people who are selling the fund. And it's important to know that the expense ratio differs from the sales charge. Two different things. They give you a layout here, a portfolio summary of all the different securities they're invested in. What the asset mix is, 80%, a little over in US bonds. They talk about the creditworthiness down here on the left. And here is the layout of these bond ratings that I talked about. Some are in capital letters. Those are the S&P rankings. The ones with smaller case letters is another rating company called Moody's. Finally, the last thing right now is turnover, which is the percentage of the total dollars invested that are sold in a given year. So if you had a fund with $100 in it and you sold $20, the turnover would be 20 divided by 100, or 20% turnover. So you can see that this fund has a fair amount of turnover for a bond fund. It sold about a little over 2.5 times the value of the portfolio in 2012, and you can see that that amount, that turnover amount, seems to be higher historically than what they've done in the years before that. That's as far as we're going to get on this review. You can go to the website and see that under Investor Education. If you click on the main page, that we do have classes, live chat classes that you can attend where we talk about these prospectus reviews in a little more detail. This happens to be the next one coming up. They're updated all the time. And if you scroll back up to the investor page again, you'll see a page off to the right. Here's my video list of the other funds, and we have a growing list of funds that I review. Thanks very much, and we'll see you next time.